What's up, traders? In today's video, we are going to be performing a market forecast on EURUSD using smart money concepts. So stay tuned. Now, if you haven't already, head over to Instagram and give us a follow at Camelthorn FX. I post trading ideas, educational posts, as well as any interesting case studies that I come across during my trading sessions, okay? I actually posted this trade idea, this 15-minute trade idea on EURUSD yesterday, the 8th of May, 2022. And as you'll see in this video, this particular trade idea actually played out. We managed to capitalize on this one at the open of the London session. I think we bagged about 7% on this one. So really interesting trade idea there, and a lot of value on this Instagram page. So I highly suggest that you guys head over there and give us a follow. Now, for reference, I am recording this particular video on the 9th of May, 2022. The time has just gone 7:15 p.m. local time. And as always, I like to start off on the weekly chart, just get an overall idea of what price action has been doing. Okay, so we can clearly see that from this particular point down here, we've had the strong bullish push to the upside before the corrective move here, which started back in 2018 or 2008 rather, excuse me. So we can map out this break of structure in here, and then we can also map out this particular swing high up there, as well as this swing low down here. Now, the reason I wanted to map these two swing points out for you is because I wanted to highlight something of note, something rather interesting, right? If we bring on our Fibonacci tool, we'll see that where price action is currently, where price action is trading at the moment, we are currently trading within discount prices, okay? So we've had the bullish push to the upside, which broke structure. We've been in a corrective pullback, okay, so a bearish pullback for the longest time, and now it would not be uncommon for us to see potential continuations to the upside, right? But that is from a weekly point of view, okay? What I now want to do is I want to zoom in a little bit more, and I want to pay attention to this particular bearish push to the downside, okay? And I want us to start from this swing low here, from this high, from this lower high here. So what we can see is so price action obviously pushed down, created a new lower high in here. We pushed down, we had a period of consolidation for a couple of years, okay? And then price action came back, formed an equal low. We pushed up to form a new lower high. And then we had this internal, I guess you could call it an internal low, okay? Before pushing back up. Now, what is significant is that this particular push up failed to break above here, and then we rolled over, okay? And where is price action interacting with, where is price action interacting right now? We are interacting with this particular swing low. So if we just map out our swing structure, we can see that we've got this particular low that remains in place. Price action is currently interacting with that. The reason I like this as a swing low is because we did not close below that low, we just wicked below it. So we can map out this particular swing low, and then we can also map out this swing high, all right? Now, from a weekly point of view, we can clearly see that this particular internal swing low, right, led to a push up. We could not break above, so we're still bearish. We had a double top, we're still bearish, and then price action pushed down to take out this one more recently, all right? So you can see this particular internal low as more of engineered liquidity that price action generated to facilitate this push to the downside, okay? What I like to do is I want to drop down to the daily chart, and I want to now zero in on this particular bullish push to the downside, okay? Or this bearish push to the downside rather. So we can all agree that from a daily point of view, price action has been pushing bearish, right? In here, we can all see that, we can all agree, okay? Now, if we zoom in and if we really look at what price action has been doing, we can clearly see that we've been putting in, again, lower lows, and we've been putting in lower highs. We had a little bit of a pullback in here before pushing down low, okay? Now, what we can see on this daily chart is that we've had this this bearish push to the downside that has now come in to interact with that weekly swing low around 104.624. Now, from a daily point of view, what we can then do is we can mark out this particular high and we can mark out this particular low. The reason I want to mark out these two swing points is because in order for us to see a trend change on the daily chart, in order for us to move from a bullish state to a bearish state, a confirmed trend change, we need to see this particular lower high taken out. Okay. However, one thing that we've noticed is on our daily chart, after the formation of the swing low, what we've seen is we've seen a bullish change of character in here. Okay, so we know that this is a bullish change of character because our daily swing point, our daily swing low has been confirmed. Price action pushed down. We had a reaction off of that. We had a little bit of sideways movement before price action pushed up and took out this particular high, right? So we have seen a bullish change of character on the daily chart. Now, what this suggests is that we could be seeing a little bit of a bullish pullback on the daily chart before potentially continuing with that bearishness. Okay, so one of two things can happen. We see this bullish pullback, and then either price action respects this area or respects this low and we continue with the bearishness, or price action comes in, takes out this high or takes out this lower high, we get a pullback, and then we continue, right? So where do we expect this potential bullish pullback to stall? Well, we've got a supply area in here, okay, and then we've got another supply area in here. Now we'll drop down to the 4-hour chart to explain exactly and to refine these zones a little bit more. But the reason we know that these are high value areas for us to look for potential trend continuations to the downside is because if we bring on our fib tool, we can see that those two zones sit within premium prices. Now remember, when you're selling, you want to sell at a premium, so you want to sell above your 50%. If you're buying, you want to be buying at a discount, so you want to be buying below your 50%. All right, so purely from a daily structure point of view, we are bearish. We have seen a bullish change of character on the daily, which means that for the short term, while we are sitting below this 50%, while we're within that discount pricing, we want to be looking for buying opportunities until we come to the equilibrium, and then we can potentially look for shorts to continue the trend, right? So we can be pro trend. Okay, now one important thing for you to note is that a change of character on one time frame more often than not is a change of trend on the lower time frame or the next lower time frame. So if we drop down here to the 4-hour chart, we can see our daily swing high up there, and we can see our daily swing low down there. And if we bring on our tool again, we can see that this bearish push to the downside on our 4-hour formed our daily low. We had a nice reaction. We had a little bit of consolidation for a period before eventually breaking above this high, which confirms the trend change on the 4-hour chart, and then again gives us that suggestion that we could be seeing that bullishness to the upside, all right, from a 4-hour point of view as well. So we have the daily chart giving us a bullish change of character, having recently put in a lower low, and then we also have the 4-hour chart giving us a change of trend, okay, with this break of structure in here, also suggesting that bullishness coming in. And then these are those two supply areas that we mapped out on the daily chart, and we can now come in on the 4-hour and we can just refine them a little bit more, and we can see that these two zones are now high value areas for us to first of all look for continued bullish pullbacks, okay, and then once we come into these areas, we can then start looking for potential shorts so that we are pro trend once again. So everything from here up until this first zone is going to be a pullback. It's going to be a counter trend move. We're going to be looking for buys. We are the opposite of what the overall daily and weekly trend is. Okay, so from the 4-hour chart, what I then want to do is just very quickly drop down to the 15-minute and show you guys how we were able to spot that trade idea and how we were able to capitalize on it. Okay, so here's our 4-hour break of structure to the upside, which gives us the trend change. And you can see that after that break of structure, obviously once you have a break of structure, you can expect to see a pullback. We have that nice deep pullback down towards here, and then we have this Asian session in here. Now what this Asian session did is it generated liquidity. It generated equal highs up here, and then it generated your session low down here. Okay, now on the 6th of May, at the start of, or just before the start of the London session, we can see the price action took that liquidity, that Asian low liquidity. London volume came in, pushed up, and then what we had is we had a minor break of structure here on the 15-minute to the upside. Now this minor break of structure we can trace back to this particular supply area on the 15-minute chart, and if we drop down to the 5-minute, we can see that that particular 5 or 15-minute zone can be refined all the way down to this particular level in here, just about in there. All right, so if we drop back out to the 15-minute, what we can see is we have a valid break of structure, we have a valid refined 5-minute supply area, we have liquidity, and then also what we have is we have equal lows that formed in here. Okay, and what we were anticipating is, if I go back to my Instagram post and just show you guys here, what we were anticipating is for the market to open, for us to take this equal low liquidity, pull back to fill the imbalance, mitigate that 5-minute zone, and then push up to retest the highs. Okay, as simple as that. Nothing too hectic, just clean price action and a general understanding of what we're seeing. So as you can see, price action, market open. During Asia, we had relatively low volume, price action pushed down, but what it did is significantly it created this liquidity here. Okay, Asian session, price action pushed down, relatively low liquidity. By the time I got to my charts, I normally get to my charts about 2.5 hours before the open of the London session. What I did is I placed a buy limit order just above that zone. Okay, I did not place my stop loss below the actual zone. I decided to take into account this little wick in here. Okay, and then for a target, obviously I was targeting these highs up here. All right, I was targeting those highs up here. So you can see price action came in. We did not quite get tapped in here, because what price action actually ended up doing was it ended up forming more liquidity in the form of more equal lows right at the end of the Asian session. We came into London, we had this spike in to our zone, we mitigated that, we got tapped into the market, and then that London volume came in, immediately pushed us up. All right, so as soon as we took this Asian high, I was happy with closing my trade, because normally you'll see here that after London took that Asian high, we came into the New York session around here. Okay, now this is where I closed my trade, right at the close of this particular candle, right in there. I closed my trade right in there, and the reason I closed my trade there is because a lot of times you'll see your New York session reverse or correct whatever London volume you saw. Okay, so I was anticipating the New York volume to push price down, and I was more than happy with the profits that I had on the table at this point. You can see it was roughly about 7% that I took on this trade. So I took my full position off here. Remember, I was still aiming for this particular high up here. Okay, so New York session opened, we have that New York volume, price action pushes down. Where does price action push down to? It pushes down to another supply area, and then it mitigates that zone and then continues. Now we just stopped shy of our overall target in here, which is to be expected, because this particular mitigation came rather late into the New York session. So you could see potentially price action pushing up a little bit, maybe retest these highs, and then we have a completely different market again going into tomorrow. But that's how we're able to capitalize on this particular trade, because we had an understanding of what the overall picture was. And what is that overall picture? The overall picture is telling us that our daily chart has given us a bullish change of character, a bullish change of character, which suggests we could be seeing a bullish pullback, and our 4-hour chart has given us a bullish trend change, which is in line with that daily expectation as well, right? So that's what we're looking at for Euro USD going into the remainder of this week, going into the remainder of May. We would like to see price action push up towards these two. First of all, this particular 4-hour supply zone, which sits at 107.085 roughly, and then if this particular zone fails, or if this particular zone doesn't hold up, we can then start looking for this 4-hour supply, which is slightly higher, around 108.320. Remember, we are still bearish overall on the pair, and we will only turn bullish overall on the pair if this particular high gets taken. Until then, expect a bearish continuation from either this zone or this zone. Okay, if you guys enjoyed this video, please make sure that you give it a like, subscribe to the channel so you don't miss out on future content, and I appreciate you guys so much for watching. I'll see you in the next one.